Hello, my wonderful people. We are back again today, and this is the strategy that I promised you yesterday. Okay, so it is a VIP strategy. In fact, I'm not going to list this on the public YouTube channel. I will be putting it in the private part so that only the people in my platform can be able to access it. It's not for everybody. Yeah, it's not for everybody. And it is a bit advanced. Even the people in the VIP themselves they don't have the advanced version now, which is this. Okay, so they have an earlier version of which I was to upgrade for them, but now here we are. I've done it for the entire forum, but I'm not going to list it for the normal channel, so it will not be public. It will only be for my platform. Okay, so here we go. It is an advanced of market maker, and market maker meaning I will be using the TDI, which is in the second window, and I've added Ichimoku on the lower window for more confirmation. And then the main chart, I have 4 moving averages. I've put 5 moving averages, and I've put 4 of them in the same color, and then one of them to be different, which is moving average 300. Okay, so the first 4 moving averages is what we've been using for our market maker, the normal strategy. Okay, so here we go for the settings. The first moving average is moving average 13 exponential, apply to close. Okay, that is for the main chart. The second moving average is moving average 50 exponential, apply to close. I've put all of them to be the same color. You can change the colors, but for me, since they are all doing the same purpose, so I've put all of them to be the same color. So it is moving average 50. The third moving average that I've added is moving average 100. Okay, for the normal market maker we use 200 and then 800, but now since I'm using for spikes mostly, I've downgraded like the moving averages to come lower. So moving average 100, again exponential, and then my last moving average on that set, no, just not this, yeah, moving average 100. There's another moving average here, moving average 150 exponential, again same color. So it is 4 moving averages: moving average 13, moving average 50, moving average 100, and moving average 150. Same color, same setups. Okay, and then the last moving average is a moving average 300, but this time round it is linear weight and a different color. Moving average 300, linear weight, different color. Okay, and then the last part of it is a parabolic SAR. Parabolic SAR changed to step 0.01 and maximum 0.5. Okay, parabolic SAR applied to 0.01, maximum 0.5, color to whatever you want. So that is for the main window. And then the second window now is this is the TDI, this. So I'm not going to cover the settings of the I'm not going to cover the settings of the TDI now because you have them in the platform. Then the third window, which is this for the stochastic, is here. Is this one here. So the stochastic applied to period 1, all through slowing 1, price field low high, method simple, and then styles is the same color as your background because we only need the We only need the stochastic window, which we now have put in our levels. Okay, so the first level is 82, the second level is 50, the third level is 20, the fourth level is 91, the fifth level is 9 or 10. So you can round up these numbers. It doesn't have to be very exact. So you can you can round them up to 80, 50, 20, 90, and 10. Okay, you don't have to be very exact on that. Oh, sorry. I'm so much misbehaving today. So then the last one is the Ichimoku. And the Ichimoku is set to 9. The Tikunsen, Kijunsen, and Senka will be set to 9. And the first two, which is the Tikunsen and Kijunsen, you put your own color. And then the others to be the same as the background. Okay, and we are done. So how do we use this strategy? You have to be very keen with the moving averages. Every time the moving averages come together, like this point here, here, be very keen with such places. Be very keen with such places because it will indicate two things. Either trend change or trend continuation. Okay, and my main essence of the moving average 300, which is this one here, is every time there is a crossover of the 300, know that the trend will go in that direction for some time. Okay, leave alone the greens. The greens are just temporary direction trend, but the main one that I'm using for the trend is the 300. Okay, so let me totally maximize out. There you go. Do you see how my charts are behaving every time we cross the 300? Do you see? Every time we cross the 300. Do you see how the charts are behaving? Every time we cross the 300, there will be long trend. Every time. So the 300 is just to give us, and mark you, this is a 500, crash 500, and you know crash 500 is more volatile than the 1000. But every time there is a crossing of the 300, you see, like here, as much as there was a lot of consolidation within here, like all our charts were crossing up and down around all the moving averages, when it reached here after these three consolidations, or 3 or 4, and mark you, this same area is the same area that it was consolidating on this other side. So after it had reached here, it didn't have any more strength, like after being used the same position for 4 times. So it just had to break free from that consolidation, and breaking free meant it had to go the downside, since all through we've been bringing all these moving averages together. Okay, so we didn't have the strength to go up. And even if you can check at that time, our parabolic sum most of the time had been on the top level. Our parabolic sum at that time had been on the top level, and even come and check our Ichimoku, we had been on oversold level. Okay, we had been on oversold level, so the price didn't have the strength to go up again, especially after consolidating on this moving average 300 for so long. So it had to break free, and that was now the beginning of downtrend. You see, so it came down, then reversed again, come and touched the 300, then came down again. So in the process of reversing to come and touch the 300, please don't even try to scalp. Why? If you need to scalp, like buy crash, let it be above 300 going up. Okay, let it be above 300 going up, but anything below the 300 coming down, don't even try. If you are not catching spikes like from this place going down, if you had missed this first big spike, then you could have surely gotten the second spike from moving average 13 and come down with it. Okay, so as long as the 300 has given you like a support and resistance area, then if you miss the first spike, you can always come and enter on the second one. But mark this again, your Ichimoku should be at oversold level. Your Ichimoku should be at oversold level. So this probably would have been here or this other point that was at oversold level. And you see when we come to the main chart, on the oversold level, it had spiked one time, and then the second time again, it spiked and put you in profit. So even if the trend didn't continue at that time because it was to consolidate, so if you locked your profit, as I told you, it would have taken you out of the market around that place, but you are still in profit. So we consolidate around these areas, all these consolidations. And after these four consolidations around the same area, it would come down. Okay, so this is again a retracement, then come down. This here, it's a retracement, then come down. Mark, we are using the 300 here as our point of reversal. Okay, and at the bottom here, this time round, we are around area 50. Okay, so let's continue going in front and see. This point here, I would not tried even to like trade the reversal. Why? I'm not so sure how far it will go back. And when you see how we are crossing the moving averages, we are crossing in sequence. And it's around only this point that we had crossed almost like all of them around this point. But the last crossover happened around here, and immediately after that it just went a bit and then crashed down again. So mark, this is 500, so it is more volatile, and since I don't have clear direction of the trend at this time, but my Ichimoku is telling me I'm at overbought level, so I would have expected spikes around this area, considering that it had been previous resistance as well. Okay, but for sure I cannot scalp this. I cannot scalp this. Why? Because our moving averages are crossing exactly in the middle. And when the moving averages are crossing exactly in the middle, I don't trade that. I will only trade when the moving averages are either above me or below me, and especially like here now, since I had known that this point is lower than this point, so moving average 300 is used as my resistance. So even if I had missed the first spike, but I had gotten these other spikes following that, because it is a 300 that is giving us the general direction. Okay, so I can only be comfortable to trade going up if, like this level here, we pass our 300 a bit. Okay, we pass our 300 a bit, then we go high above again, you see. And this time round, you see, even we cross the other moving averages just immediately after we cross our 300. Okay, so such setup, like when you compare this point here and here, this was more of middle, but this is more over the bottom. Okay, so from this point now, I would start checking the market for up movements after this point here, up movements. Okay, so we continue, and now you see here the same point I was bringing home. So after this point here, it came to retest the 300 again. Now this was my confirmation that we are no longer going up, we are no longer going down, but we are going up. Yeah, and you see it consolidates around area 300 for so long. And mark my word again, while we are consolidating around area 300 for long, this is very important. Mark this. We bring all the moving averages to one point there. Like they all meet in one point. Okay? They all meet in one point. And while all that is happening, as much as our Ichimoku on the lower side is not on the oversold, but we are somewhere between 50 and 20. So we are on the seller side. Okay. So we are on the seller side. So the only way out for us here is if we break and go down completely, or we break and go up completely. But from here, you see, after the consolidation, after our consolidation around this area, then we break and go up. So we were using this 300 as our support, and we went up. So for sure, I would have bought from there. After our consolidation, it had shown me the signs of breaking out of that area, and I would have gone up with it. Yeah. Also, check my whatever, what is this, parabolics are at this moment it was below us. My parabolics are at this moment it was below us, and my TDI at this time is relaxed as well, but it is above level 50. Why I use TDI for confirmation if it is buyers or sellers is that your market should have consolidated around the 50 area for long. Most of the time you will get a trending market. If it really wants to trend, it will start from 50 going up for buys and 50 going down for sales. Okay, so your TDI, never ignore it, especially when it has consolidated around the 50 area for so long. Know that after it breaks out, it will either go up or go down. Okay, it will either go up or go down. So anytime your market consolidates at around area 50, be very keen with that. So this for sure was using level 300 as support, and from there you bought. Okay, let's continue. And you see from there, as much as there were spikes, but it was not like massive spikes that were coming to catch you. Okay, it was not like massive spikes that were coming to catch you. And even if you check the spikes, so the first spike crossed 300, not 300, crossed 13 and come and touched 50, the second moving average. We go up again, we come and cross 13, cross 50, and come and touch 100. Okay, the third one, and mark you, all this is still under the same parabolic, yeah. So if it was really a massive reversal, of which on our Ichimoku here, it was showing at that time oversold, no, overbought I mean, so it is supposed to reverse back. But since our moving average 300 is below us, so the market does not have the strength to come down in spikes. Yeah, so of course I would have locked my profit, especially after this first spike. As we started going up, I would have placed my stop loss around this area, so I would have been taken out by this first spike, the second spike that came. Yeah, but all these consolidations, I was out of the market. Maybe I would have re-entered after here to just buy, but this is now for fun, not like a serious one, very small lot, because it had used my moving average 100 as a support. You see, it had used my moving average 100 as my support, and if I check again on my TDI, it had been around the area 50 again. It had consolidated around area 50 for some time. So when it broke free out of this zone, I knew for sure it would buy for some time. But on this second phase, I don't hold for long. Why is this? Is because I know it's just retesting this area. It's just retesting this area the second time. So I would not have taken it very serious. So here I can just hold on to like 15 to 30 candles and I'm out. Yeah. So I would have exited around that area, around this point. So I would have exited around that area because I knew from there anything can happen because it's the second retesting. Okay. We come again. There's a lot of consolidation around this area, But since it is the second retesting of this point here, and you see these two spikes that come in the same area, then know that we are now in the process of going down. Like we've gained the momentum to start going down again. When you check our Ichimoku this time, we are at overbought. And while we are at overbought, our TDI is relaxed, not like completely again overbought. In fact, in the middle. Yeah. So around area 50. So anytime, watch out your TDI. If we are playing around area 50, yet Ichimoku is at overbought, and our moving averages have resisted the same point twice. Know that we are ready to go down. Okay. So here, after the first, the second spike here, like this first spike comes down, second spike comes down. By the time I was on this third small spike, at that time I knew we are going down, so I would have gotten this other spike and come down with it. And why I would not be so keen to close this is because I knew this time round it will break the 300. So even if I had missed really all this initial setup here, as much as it is showing me that, the moment I crossed 300 here, the moment I crossed that, then for sure I would have gotten all these other spikes. It was a clear show of direction change. Clear show of direction change. Why? All these consolidations here was giving us room for the 300 to flex itself and come and change direction like a V. Okay? So the 300 is this lower one. So see here, all the moving averages come together. All the moving averages come together. The 300, 150, 100, and 50 and 13. All the moving averages come together. So anytime you find the moving averages come together, know that after that there will be massive spikes. So for this, you could have gotten your entry here, especially even if you had missed this first spike here, but the second one, which is this one, the second one, and you see it spiked on the same area. So after that second spike, you did gotten your going down trade here. Yeah, you did gotten your going down trade here, and just go down all the way with it. Okay, just go all the way down with it. Why I love this kind of setup is when 300 linear 300 gives us direction. When we are above it, we buy. When we are below it, we sell. So from this point forward, I will be looking for setups that I think I need to put my flight mode to avoid those notifications. Yeah. Sorry. So when we go down on massively, like after the change here, when we go down massively, look for 5 to 6 spikes. 1, 2, 3, 4, 5, 6. The trend has gotten tired at this time. Go out of the market and wait for it to reset itself. Okay, wait for it to reset itself. So on this buy here, I always, when our moving average is going in the middle of it, so I don't buy. Some people do buy, but I don't buy. And wait for a reset around the same point it started spiking earlier. You see, the same point. Yeah, so if it will use our earlier point again, like it spikes on the same point, take the second one. Okay, because it used the same resistance, take the second one. The second time that it is always retesting, now this point, the second time it is always retesting, it will not need to go change of faces like here, the way it was crossing one moving average after the other, like a staircase. So the second time when it is always retesting a level, it will go in a swoop, one strong straight line. Okay, it will not go like the staircase like here, but it will go in a swoop. So every time you find yourself like it is spiking from the same area that it had first resisted, immediately after that small spike, go the second time. So you will only be negative from like this point to the top and then come down with it. And when you check our Ichimoku at this time, it was at level, it was completely at overbought. So anytime it is at level 80, it is overbought. Okay, but something else that I want to show you, I will show you at the end, but let me use this here. When how you apply this strategy is I want you to see something. I need to take an arrow. You use this strategy well when, if you are on your end of the screen, you make sure your screen is towards the end of the page. I will do that live so that you see, but make sure like here towards the end of the page, and you see our Ichimoku, it's touch level 90. Okay, that is why I had put 90. Okay, there, do you see our Ichimoku touching level 90 there? I know it's a bit squeezed, you cannot be able to see everything, but our Ichimoku is touching level 90. So you wait for it to, when you squeeze and come forward, you see it resets itself and comes to level 82. But when we are at the end of the screen like this, it touches level 90 and then drops again to level 82. So anytime your Ichimoku will go and touch level 90, so it's crossed 80, go up, go touch 90, and then starts coming down. As it crosses 80 on its way down, know that it will spike from, I'm trying to pick my arrow. Know that it will spike from level 80 all the way either to 50 and reverse again to go up. If at that time our 300 now, which is this, our 300 was like below us. Okay, if our 300 was below us, so you would find this arrow would have spiked up to 50 and use 300 as support and start going up again. So there are two ways to it. If we've crossed 300 at our initial level, as we were crossing here, if we've crossed our 300 when we were like around this consolidation area or somewhere here, if we have crossed 300 before we reach 50, know that we will go all the way down to 10. Again, if you bring it here, it touches 10 before it retraces back to 20. Okay, it touches 10 before it retraces back to 20. And I told you on top, at that time it is at exactly 6 spikes after the massive spike started coming. So it reaches the end of the strength of the spikes before it started retracing again. Okay, so if by the time we are reaching level 50, if by the time we are reaching level 50, which is here, our moving average on top, moving average 300 linear, is still below us, know that it will reverse at level 50. Okay, know that the Ichimoku will reverse at level 50 now here. But if by the time we are reaching level 50, we've already crossed the 300, then know that we will go all the way down with it. Okay, we will come all the way to level 10 and then start retracing. Okay, so when we go and touch level 10 and then start coming back to level 20, know at this time again that we will buy for some time. Okay, now let's see back if truly it applies. You see here, it didn't touch 90, and so it was not ready to come down. So it still had to consolidate. Let's go back. Around this area, it had gone past level 20. It had gone past level 20. And while it is at level 20, gone past level 20, probably by the time you're on the end of the screen, it was going below that. And on top, we are already using our 300-day support. Okay, so below we are past level 20, and on top here we are already using our 300-day support. So at this point, the market didn't have any reason not to go up, especially when it is moving out of our level 20 coming out. Okay, let's go forward. So this time round, I told you, if it is retesting the same level on top, at the bottom, it will just hit once and go. See again, it comes and retests the second time, level 80, and comes down. Why the second and the third time it is not like retesting for long is because it is the second retesting and the third retesting of the same level. Okay, so you see, even on our TDI, same peak comes down, same peak comes down. Okay, so the second and the third time, it always comes in a big swoop. It does not need to how can I put it? It does not need to reset itself like crossing the moving averages and whatever. It comes in a swoop. Now check again here. So the second drop on our Ichimoku comes to around area 50. It starts retracing, goes to area 80, then comes now down completely. Okay, so our area 50 on our Ichimoku is very important, level 80 and level 30. So it will always play around these areas. But for a real true reversal, it will go past 80, touch almost 90, and then retrace back. Okay, we continue. You see here, it was very clear. It went past level 20, on its way out of level 20. You can buy it, but hold up to level 50. Don't go past level 50. Okay, don't hold past level 50. Why? Because at this time the moving average 300 was above us, so it would probably use our 300 as resistance at the top. Okay, and you see, immediately after it crossed 50, it just went a bit higher, then started coming down. Okay, let's continue. So when it is playing around these areas, it's not very good. I only place this kind of trade if it's spiked on the same area. Yeah, it's spiked on the same area, because the Ichimoku down is not showing me a clear trend at that time. But I will only place it if it's spiked around the same area. So the first spike comes, the second spike comes on the same area. So I can comfortably say this is another strong resistance and place it down. Okay, so while going up in such an incidence, I wouldn't be so keen, but after I've seen that it's crossed and all these moving averages have come together on one point again on its way up, I could have somehow placed it a bit, but not very long after it crossed that spike, the previous spike from there, and I just hold like 20-15 candles a bit and be out. I would have exited around that area. Okay, I would have exited around that area. And while on our Ichimoku, it was touching 80 at that time. Okay, so we continue. All this time here, it is around the same area, and you see the fractals is facing down. The fractals is not fractals. Parabolic SAR is facing down. Like when it's reaching where the parabolic SAR is, it spikes, the second time, the third time. So by the time it was coming to retest this one here, I could have for sure seen the trend now and used that to come down with it. Though all this time I knew we are not on like a very strong trend. Why? Because our moving average 300 is exactly at the middle of our trend. Okay, it's exactly at the, as much as it is below us, but all this here, all this consolidation has told me that we are going down. Okay, so I wouldn't expect to hold for long. Yes, because our moving average 300 is at the middle of us. But if at that time we come and cross level 50, and by the time we are crossing level 50, we've already crossed 300 moving average, then it will still go a bit. Okay, it will still go a bit. So it will do our normal big spikes, either 3 big spikes or 4 to 6 small spikes. Okay, so 3 big spikes, 2 to 3 big spikes, or 4 to 6 small spikes, this area. Okay, and here it did 1, 2, small one, 3, and the last one, the losing of the trend, the fourth one. Okay, and then it starts resetting again itself. Here it used 300 as a resistance, came down, started going up. These crossovers, the moving average crossovers, be very key with it. The moving average crossovers, and especially if such crossovers happen, if our Ichimoku is below us. Okay, so here it was happening at level 50. So I would for sure place this trade, but a few candles, not like to stay in for long. Yeah, and then this consolidation here, this consolidation, then going up. What it had given me again more whatever is that it's spiking on the same area. Yeah, and when you check our Ichimoku at the bottom, it's crossed. It's crossed. It's crossed. So while it's on its way back from level 90 or 80, while it's on its way back, you can place your trade. The second one again comes, the small spike comes when we are above level 90, when we are above level 80, I mean. So after this small spike, for sure I knew, because it's retested along the same area, for sure I knew this is a weak resistance area, and I would have gotten all this. I would have gotten all this. And after the first big spike, all the moving averages had crossed. All the moving averages had been crossed. Okay, so for sure, even if you missed the first big spike, you could have gotten all these others. You could have gotten all those others. Why? Because the one big spike that came, we crossed our 300. We crossed our 300. And I told you, if on our Ichimoku, we cross our 300 before level 50. Okay, we cross our 300 before level 50, then we are going down for long. Yeah, we are going down for long. Okay, let's continue. So check again here. So we cross here, we come down for long, like 5 or 6 spikes, as I told you, until it gets tired, comes and retraces to go above 300 and spikes down again, spikes down all the way, spikes down all the way. So while I'm down here, if my Ichimoku is at overbought and I'm down here, like as I told you earlier, if our moving average 300 is above us, I'm not so sure, I'm not so keen to buy at that time. Why? Because our moving average 300 is above us. Okay, I'm not so keen to buy it because our moving average is above us. So I know for sure the 300 will be used as resistance. So yes, we will go above it a bit, but it must reset itself and come down. So you see, it goes above, one spike, consolidates around this area, tries to go up, and then another spike. Another spike, you see, another spike. And when we check even on our TDI, the second spike comes at the middle Bollinger Band, which is the market baseline. Yeah, which is the market baseline. So from here it will give you that solid indicator. And mark you, this spike here brings all the moving averages again together. So anytime you cross all the moving averages in one spike, anytime you cross all the moving averages in one spike, know that the trend has been established and it will go down. Look even here. These moving averages crossed all the moving averages in one spike. Here again, and especially 300 being on top of us, and then all the others like 150, 150, and 13 was all below us. So we were for sure going down for some time. Okay, this strategy, if you are keen with it, you will be able to trade for long trends. Yeah, like you see here, as it used this as resistance, it came down for so long, so as I told you, I can exit this trade here, and then as it retraces, because I don't know how long it will retrace, after the first big spike, this one, I could have really for sure entered on the second one. Yeah, and now just coming down with it, and locking profit. When it takes me out of the market, it is well and good, but I'm just coming down with it with a trend. Okay, with a trend, this one again, it would have taken me out of the market here, it would have taken me out of the market, then it goes up. But as I told you, these points here, I'm not so keen to buy until when the moving average 300 is below me. So here, I would add, after this first spike, second spike, I could add for sure. When you see two consecutive spikes coming almost the same time, yeah, know that the third one will come. Check even our TDI. Yeah, so the first spike is at the top, and then the two following spikes is in the middle Bollinger Band. Yeah, is in the middle Bollinger Band. So for sure, I could have gotten these others. Why? The first and the second spike had shown me that our resistance is already weak and we are ready to go down. And even if you check that spike where it came, it was going on the same level as this. Yeah, going on the same level as that. So I could have gotten these spikes coming down. And since we were generally on a downtrend, I knew for sure getting those downtrend spikes is much easier. And I always lock my profit, so when we retrace, it takes me out of the market. See here again, 3 spikes on the same area. 3 spikes on the same area. It tells you we are going down. And since our general trend had been a downtrend, so you miss the first spike, you miss the second spike, but the third spike, you get it, go down with it. Okay, as I told you, on such setups, I'm not so keen to buy unless until the time. Now, like this setup here, look, this peak here, this peak is higher than this peak. Okay, this peak is higher than this peak, and while we are on this, we were still on a slanting, like coming down. We are still on a downtrend, but check your 300 at this time. It had started relaxing and forming something like a cup, showing you the direction, like, you know, it's no longer steep going down, but it started changing direction, like going up. Yeah, so the moment these many spikes happen on top of 300 and only one break below it, and then the market retraces itself, see, all our moving averages are brought under 1 point. Yeah, and when all the moving averages are brought under 1 point, now from here, for sure, I could have bought. Yeah, and this is the kind of trade you buy and you hold around 45 minutes to 1 hour. Why? All the moving averages that come together under 1 point. All the moving averages that come together under 1 point. Come and check our TDI. It had been playing around area 50. It had been playing around area 50, before that false breakout down, just one spike and then retracing back again. So this area here was to show you trend direction change. Okay, so anytime there is a crossover on 300, check how it is behaving, how the 300. Of course there will be these fake ones that it is retesting, but here the real image you will get when we are really crossing over, there must be some consolidations. There must be some consolidations, like to give room for all the moving averages to come together. So while it is consolidating, the moving averages are moving in together, and then the last spike that will come, it will break through all of them and then reverse. Okay, so as it is reversing back, it will go up for some time. Okay, let's continue again. The same thing comes and happens while it is coming down again. It comes in stairs, you see, coming in stairs, using the different moving averages as our resistances. And of course, at this time, I would have gotten my 45 minutes to 1 hour buy and be out of the market. So while all this is happening, okay, this only applies to 500 because it is more volatile, and that is why I chose to use it as our pair for today. But you can always use a thousand. The thousands go very well. Okay, so while all this is consolidating here, it's not giving me like proper direction. Why am I not so keen to go down with it at this time? Is because our 300 is below us. Our 300, and until we only come closer to the 300, I know spiking going down in one swoop will be a bit difficult. Okay, it will be a bit difficult. So it will consolidate on top, going down, coming down, going up, coming down. So after this first spike that cut across 300, then now I would have known that it is almost my area of entering. Check again, a small spike here, and then retracement. Now 2 spikes below it. Yeah, 2 spikes below it. Check this point here. All the moving averages come together. And from there we come to the end of our consolidations, and from this point it is swooping 4 to 5 big spikes. Yeah, immediately after the moving averages come together, it is a swooping 4 to 5 spikes. Like by this time your resistance could have already been broken. Okay, so mark these points very well, these crossovers of the moving averages, or before even they cross over, as they come together of the moving averages. This is your point of entry here. So of course you could have missed all this while it is consolidating and coming down, but from here you get all this, and you can't compare what you missed at the top here compared to what you will get at the bottom here. Yeah, so immediately after crossover of 300, know that massive spikes will come for sure. Okay, we continue. This here, well, I wouldn't have taken this seriously because we were not at the overbought either at the bottom, and here we were just like along the moving averages. Yeah, but maybe I could have gotten the last one, but again it retraces, and when it retraces, it will go up to the same point. Yeah, small retracement because we are now above 300. Small retracement and still go up again. Yeah, as long as we are above 300, when it does not show you a clear pattern of we want to come down, please don't try to catch spikes. Why? I could have retested and seen how it will behave around when it had brought me these 2 spikes here. I could have seen how it had behaved when it reached that point. But since it didn't show me any signs of reversing, then it will still go up. Okay, and there you go. You see, before it starts crossing 300 again, it must consolidate on top for so long. Finding room to come down. And you see, even this one, it uses 300 as support here. goes up a bit, comes down again. So around this area, I could have entered either in this point because it had now shown me that the trend is weak completely, or after this first one spike, as it is coming together, bringing all the moving averages together, I could have entered from there. And you see from there, you got all these spikes, as much as it was a ranging market, but you got all these spikes coming down. Okay, you got all the spikes coming down. We continue. So at the bottom again, when you see all these consolidations, it is giving room to the 300 to come and relax. Okay, giving room to the 300 to come and relax. And immediately after this first crossover comes and retests it here, another on top uses 300 as support, false breakout. After this point here, it had to go up surely, because this is the third leg of the first retesting, second retesting, but after this point it had to go up. Yeah, it had to go up. So I would have bought comfortably here. And at that time, you see even our moving average is forming something like a cup, giving you a rough idea that the downtrend has come to an end and now we are going up. Okay, let's continue. And all this here is just retesting of the, I told you I lock my profit as I go. I lock my profit as I go. So all this, so these spikes would have probably taken me out of the market, of my buy trade. Yeah, but most of the time, if I get like this, I would get, when it is a major reversal point, I will do between 45 candles to 1 hour. Yeah, so by the time I was done, maybe even this second spike caught me, but the next one, when it came and it was on the same point, I could have closed, because I knew either it will continue spiking down, but there was still also room that it would go up. So I could have left maybe around this point after the second spike. Yeah, it went up a bit, then came to retest our 300. And now again, we start consolidation around area 300. We start consolidation around area 300 for it to give room to make a curve. Yeah, for it to give room to make a curve, like to start going down again. So it had to consolidate around this area. And by the time I was, this spike here comes on the same area as this spike. So this would have given me a big hint, and I would have gotten this other spike. Okay, came down with it. I could have been taken out of the market around this place. It retraces, but when the first spike here came, or even the first and the second, I knew we are going down. Why? Because it was, you see, these two are upper levels and this one is a lower level. Okay, so, and all our moving averages had come together around this point, so there was very, very less resistance. So I could have missed the first spike and the second spike, but I could have gotten all the others and come down with it. And I told you, when you get such a setup, do 5 to 6 spikes and get out of the market, because at that time the trend will start getting weak. Yeah, the trend will start getting weak and it will consolidate for some. And how do you know of such setups? When you check your TDI, you find like all these big spikes, it was just a rough moving averages together, really, like not showing you any clear trend on the TDI. So it's come together. So as it is breaking off from that area, know that it will go up for some time. Yeah, it will go up for some time. So I would not have gotten this because it was not giving me any clear direction. Yeah, but from there it just goes up all the way to go and retest the higher level. Yeah, so we've gone above level 300 and then we start consolidating again and coming down. This is the point I was telling you, that on our Ichimoku, you will find it will come from at the top, come to the 50. Why? Because while all these crossovers were happening, 300 was below us. Okay, so you will either find by the time we reach 50, if we've not crossed our 300, it will consolidate, like it reaches 50 and starts going up. But if by the time we are reaching Ichimoku 50, we've crossed our 300, then we shall for sure, like now this point here, we are at the bottom, the consolidations, and yet we are at the bottom. Okay, so the moment we cross, like check this point, all the moving averages have come together. All the moving averages have come together, yet we are at the bottom. So for sure, this is a buy. Yeah, this is a buy. Same high point, same high point like the previous one, and this, and again this. So those high points, I even don't need to mention that. You get all those spikes. As long as the first spike comes around the same point, know for sure the second one is coming. Yeah, so even if you had missed this, you could not miss the second one. So here, if you had missed the first one, you cannot miss the second one. Okay, so it comes, it crosses, gives room for the Ichimoku to reach level 85, and then it starts retracing again. You see, while we are crossing our 300 here, our Ichimoku is still below level 50. So there was room for buying here. There was room for buying, goes up all the way and goes past the previous high. So it is forming this. So this time round, it was a consolidation that would have only brought you to level 50. Why? Because 300 is way far below us. Okay, so these three spikes happen. So you see all these small spikes is telling you, yes, we are on an uptrend, but not very strong. Our resistance will be broken soon. Yeah, our resistance will be broken soon. And then from there, see the way it comes down. But it crosses 300 a bit and starts retracing again. Why we can't go past this point is that our Ichimoku had to reach level 50 because our 300 was very far. Retraced itself up again, yeah, and it still continues now to go up completely until when we reach this point where there's some consolidation. Yeah, some consolidation. But these two are spiking around the same area. Okay, still an uptrend as long as our 300 is used as a base. As long as our 300 is used as a base. So the spikes will come, but it will reach 300. On the Ichimoku, it will reach 50. Okay, let's continue. Our 300 is still used as a base. So it will only spike to level 50 here. It will only spike to level 50 as long as our 300 is used as a base. Okay, check. Here, after the crossover is happened, check here. Then we start going down completely. Okay, so check the movement of the 300. Check the movement of the 300 and be very keen when all the moving averages are brought together in one point, like here. After they are brought together in one point and we've crossed 300, know that we will go down for some time. Yeah, so you see here again, we come and cross it, we go up. Immediately after the crossover, don't even try to catch spikes unless you are buying for some time. Okay, we go again, we come down with this, but it was a bit of struggling, no clear spikes because our moving average 300 was way far below us. Okay, so we struggle coming down. Yes, though we are getting spikes, but it is struggling. Yeah, we go up again, and here we are now at the end. Now this is what I wanted to show you. This is what I wanted to show you. Make sure you when you want to see where it's reversed, bring it towards the end. Towards the end here. Bring it towards like a quarter of the page. Okay, leave this space blank. Yeah, leave this space blank, take it to the end completely. How do you do that? When you press long, it will give you this, okay? So when it's given you that, make sure you take it like to the quarter of the page and press again. So your chart will have been set around that area. So take it to the end completely and then check your Ichimoku. It must cross level 80. Sometimes it will touch level 90. So if it crosses 80, goes up, touches 90, as it is coming down, the moment it crosses 80, have confidence to sell, because at that time it will sell up to 50. Okay, at that time it will sell up to 50. Okay, as long as it had crossed level 80 going up, as it is coming down crossing 80 again, sell up to level 50. For sure it will reach 50. And if by the time you are reaching 50, our moving average 300, the red one, our moving average 300 is still far from us, or we've already crossed by the time we are reaching 50, then know that other spikes will come. Okay, so the most great and determinant thing is that by the time we are reaching 50, if and when we've crossed 300, then we will continue going down. But if when we are reaching 50, we've not crossed 300, then it will reverse at level 50. Okay, it will reverse at level 50. So that's it for today. And I know some of you guys, I know you are so keen to get these strategies, but sometimes you are not utilizing. So only use the strategies that I know you are in the channel to benefit. Yes, I will try to give signals when I have time to do so, but I don't promise to be able to do that always. As I told you, yes, I'm not a full-time trader. I'm not a full-time trader. That is why I don't get time to be on the charts always. But when I give signals, I give winning signals, yeah? But I've really shared a lot on the forum. Make use of that. I get so many requests in my inbox asking for another strategy, I've realized that as much as we put a lot of effort to give you people these strategies, some people even don't utilize it. They don't utilize it. And for sure, I've given 4 solid strategies on the free platform that if you could have utilized it, you could have made money. And one of it is the market maker using the TDI. That is a very solid strategy. The market maker using the TDI, both the mobile version and the laptop version. I've given you the templates for free. The second strategy that is very solid that I've given you is the TDI itself, because I did for the market maker and I did the independent TDI itself. Okay, so the TDI itself again is another solid strategy. I use that daily. Even in my VIP, I still use that, the TDI strategy. The third one that I've shared, and it's really a very solid strategy, is the one that had different levels of level 10, level 20, level 30, level 37, level 42, level 47, level 52, level 57, level 62, level 60, level 70, 80, 90. You remember that, the 60 RSI, that every time it was touching any of those levels, it was spiking. So that I still use daily, and it is a very solid strategy as well. I've given all that for free, but people are still inboxing for, for more solid strategy. So, and the other one, that is the third one, a solid one. And then the last one is the market belly trading. The market belly trading, in my opinion, is a very solid one. There are people who are inboxing me. One guy was asking how can I use or what lot for $10 account. The next comment he made was he had already made $40 with that belly, belly strategy. $40 to add to the $10, it was 50. The following day again he came and commented that just for one spike of 0.3 he made $6. So the daily strategy, he's using it to make to trade spikes and as well as trading the trend. Okay, so these strategies I know, and that is why I love sharing good things. But why I want even people to be in the VIP is because when you pay for something, you will treasure it. When you pay for something, you will treasure it. Because I know I have more than 500 people now in the forum, but only 1 or 2 will utilize that strategy that we've given for free. And it's a bit unfortunate, yet other people are making money with it. Anyway, I'm not saying I will not share anything good that I get, but the truth is, I know people don't take or don't treasure free things that they get. But anyway, that is, lesson for another day. But yeah, here it is. Utilize it to your advantage. And it was part of my VIP, and even people in the VIP know this. I shared it with them. Though this version is more advanced than what we have in the VIP. But yes, use it to your advantage. So happy trading, and God bless you. Bye.